I'm Alan Kenny, Editorial Director with REIT.com, and I'm at REITWeek 2013, NAREIT's Investor Forum in Chicago. Joining me is Steve Brown, Senior Portfolio Manager with American Century Investments. So Steve, let's start off. Just tell us, what are some of the particular REIT sectors that your fund's high on right now?
Well, as we sit here in June of 2013, what we see is the economy starting to pick up in terms of cyclical names doing better. And so we like the hotel REITs, we like the mall REITs, and the industrial REITs. We're seeing some signs, or a number of signs, of the economy improving, whether it's in California, the energy belt, or the Southeast. And what we think will happen is that we've passed the low in interest rates, and we'll probably have higher rates, better economic growth in the second half of 2013, as well as a little more concerns about inflation. So these REITs that have shorter lease types, such as the hotels, industrial, and the mall sector, should perform pretty well in the second half of 2013.
Do you think that REITs still have room to run? I mean, it's been quite a couple years for the industry.
Yeah, we get that question a lot. And I would say this, that while REITs have done well for investors over the last 3 or 4 years, what we see today is very good fundamentals in the United States for commercial real estate. We see demand growth of about 2% and supply growth of 1%. So anytime you have demand greater than supply, that's a good fundamental picture. And I think that makes REITs an attractive investment over the next 12, 24 months.
How about a key story that you'll be watching in the second half of 2013?
Well, we're continuing to watch the monthly employment reports come out, because if we start to trend at the 175,000, 200,000 jobs a month, I think that's really all clear for the economy, and then you really want to be in the property types that will benefit from an expanding U.S. economy that's growing on its own, as opposed to being supported by the Federal Reserve.
What would some of those sectors be? Office, I guess?
No, it would still be the big three I just mentioned, hotels, malls, and industrial. But if we did ramp up to 175,000 or 200,000 jobs a month, I think that would be a second win for the apartments, because then you just have so much job creation that would be good for housing in general, but I also think it would be good for rental housing.
Well, Steve, thank you so much for your time.
Thank you.
And for more on this and other REIT news and analysis, be sure to check out REIT.com.